Silver Dave here, coming to you with another video. So I've been out a few days and I was doing a lot of other stuff. You saw that I was doing a few videos on machine learning. That's because I was coming back home late. I was working on the program. And then, well, a few things happened over the past few days, quite a few things in the world of gold and silver and also platinum. And basically, if you haven't lived under the rock, you saw that gold prices have crashed. I mean, it's down 13%. It's going up a little bit today, but it was down 13% relative to its, I would say, to its highs. And let's talk about it. Let's find out what's happening with gold and silver. Let's go. So as you may know, I've been doing a few videos, they're quite long, about how I was trying to teach my computer to predict gold and silver prices. And I was doing this over the period, I started a bit before the actual current crash. And I was working on it for a while. I was reading a few articles, trying to get my head around how it works and the basic principles so that I don't really mess it up. And when I first did it, basically the predictor didn't work very well. And then I started refining it. I'll do another video about the exact program and what I was doing to make it more, I would say, try and improve upon it. I think there's still quite a few improvements I can make in terms of how it learns the data and the type of data I can put in. But anyways, to sum it up, over the past few days, if you look at the price of gold, it's gone down. We were on a downward trend since this is end of July, August, until November. So for 3 months, we've been a bearish trend. But it's been touching down on the exponential moving average, the 200-day exponential move. We broke through the 200-day exponential moving average. And some people are freaking out. They think that there's going to be a bear market. And today we saw a massive reversion. And one of the things I've been doing with the machine learning program is I'm trying to refine it a little bit to take into consideration when markets are oversold and overbought. So I've been adding in RSI, short-term and long-term RSI. And one of the problems I had with it is that actually calculating the RSI is quite, it's not so hard, but it's computationally expensive if you don't do it right. And you could end up with a very long loops because you're looping back in historical data. And if you do have a lot of data and you have thousands of loops and you're trying to structure your data to feed into the machine so it can learn the patterns, it takes a long time. And I realized I did something really stupid and I optimized the algorithm. I reduced the time it takes to structure the data by almost, I think before it took like 45 minutes for one ticker. Now, to calculate the RSI, for example, for just gold, now it takes about 2 minutes to calculate the RSI for 14 days, 1 month, weekly, yearly, for for all the tickers I want. And basically, it's much, much faster. It's scales of magnitude faster. And so I was able to get basically what it was here is a forecast for gold price of 100 days or more. Of course, you can see that it's not perfectly accurate. I mean, there's deviations. There's things that it cannot predict. For example, here, right? Early March, it could not predict the dip in gold pricing in March because it doesn't know about the coronavirus. It could not predict the upwards momentum because it cannot know what the Federal Reserve is going to do before the Federal Reserve does it. It doesn't know here that, Tesla's doing a stock split. Now it does know Tesla after it's done a stock split. But what I find funny is that it's continuously predicting a reversion. And for all of my long-term sort of machine learning models that I've been trying to use to try and make future predictions about the price of gold, it's not just based upon the price of gold and how gold behaves. There's also the US Treasury notes that I'm feeding into it. There's also the 2-year, 10-year, 5-year. There's cryptocurrency, crypto indexes, multiple stock markets. There's the different currencies, the euro, the yuan, No, not the yuan. The yuan didn't work. It doesn't have live data from Yahoo, but the dollar index for sure, the VIX index, and also I think I put it in option pricings. Anyways, yeah, I think there's in the long term there's quite a bit of upward pressure for gold. There are times when it predicts that it will come down a little bit, but overall it predicts that we are on an upward trajectory because of the overall situation, and that is the most likely outcome. It can be wrong. It's not a crystal ball. It is like basically, I'm some dude who spent like 3 days studying this to figure out how to like run the programs and then write down the code, parse the data, and then get it out. I haven't studied this for years, so I am not an authority on like machine learning predictions. I'll share like these outputs with you guys, and you can decide what you want to do with them. But yeah, so overall, the machine believes that the overall situation, there's a lot of upward pressure in the model, like upward pressure for gold. And I think that pretty much, if you look at how the market is and how things are, I think it's not so terribly inaccurate, right? If you look at the price of gold before any time we had a massive upward movement, we broke through, first of all, the 200-day moving average. The last time we had was in March. It dropped. Anytime we dipped below the 200-day moving average, it reverted, and it went on a sideways grind upwards. Then it reached this point where the Federal Reserve decided that, okay, we're going to do QE, and then people priced in their QE expectations. They just overreacted and they just bought a ton of gold. Now we are at the point where we are sort of below when QE was there, but still in the same market situation that was after the initial shutdowns, right? Except that at this point, like right here, compared to here we have a few hundred, I mean, we have a few, how many people was it? We have tens of thousands of people infected every single day, and here we had none. Basically, we had almost none, and then here we had tens of thousands every single day. And I don't know, the economy, like if you look at Black Friday numbers, I did a video on Black Friday numbers, and right now there are numbers out for the UK. There are some preliminary numbers based upon credit card transactions, and credit card transactions says the overall sales are down 20%. In my last video, I said, look, online sales are up, but foot traffic represents most of the sales. And if they go down by 50%, or even if there's 20% less people, you could expect 20% less spending, even though credit cards have gone up. But credit cards were just a drop in the bucket for the overall spending on Black Friday and Cyber Monday. And people are out of jobs, they got less disposable income to spend. It's very less likely that they're going to splurge on their holiday presents. And also, there's not much stuff to splurge on. You want a PS5? Good luck. You can't buy a PS5. I mean, the really cool things that people want, they can't buy it because there's no stock. And yeah, because places have been shut down. And typically what happened was before, during Black Friday, people rush to stores and they will buy stuff. But it's more impulse buying than planned buying. And when you're online, and how it's structured is it's more planned buying. And planned buying, people buy less. When people are impulse buying, they see a deal on television, they grab it. They have a feeling of scarcity. And that's very different from the current situation, because you cannot just go and impulse buy. You can't. Not the stores have moved all of their things online, and they don't have physical stock. So, what have I been doing in this case when gold has been dropping? Well, I can tell you, you can see here, like I've got my gold stack, it's increased significantly. I've been buying gold during the whole time it was going down, right? And I'll still continue to buy gold for the long term, because I believe in the long term, the outlook is pretty positive. Now, I'm not buying 1 full ounce at a time. I tend to go for fractional gold. I go for these sovereigns, which I'm picking up 4 this month because it's gone cheaper. And also I buy in Swiss francs. And right now, gold in Swiss francs is just a little bit more than at pre-pandemic levels for me. That's I would say last year it was around 1,300 Swiss francs for an ounce of gold. Now it's after the end of the last year it was around 1,400, 1,500. Now it's 1,600, and that's cheap. That's not a bad price for gold for me to buy in a little bit. And I've been picking up these, basically they're quarter ounce. The sovereigns are 0.235 ounces, which is 0.015 less than a quarter ounce. But pretty much these are quarter ounces. And I've been picking these up. They have no premium on them. I have no idea why there's no premium on sovereigns, but sovereigns have no premium on them. And if I bet a spare cash left over at the end of the month, I tend to pick up one of these LMU gold coins. You know, they're 90% and they have no premium on them either. So, and in my channel, I'm a big proponent of buying fractional gold with low premiums. Because if you look at a gold eagle, fractional gold eagle, it's really expensive. It's like if you buy an ounce, you're almost at a $200 premium. It's very it's pricey, and also unless you're willing to shell out for the full ounce, which is a lot of money, not everybody can do that. And I think the gold source, they know it. That's why they're putting a lot of premium on the quarter ounce, a half ounce, and they're putting it at the very top. Is because, well, dealers, they make most of their money through their margins and the premium, and they will always promote things that have the most premium first, and then last what has no premium on it. And these gold sovereigns are not less than a gold eagle. I mean, in terms of what they are, they're same caratage, same percentage. It's just an odd weight, and I think it's just that. It's the odd weight that makes people, like, you know, not jump into it. But if you think about it, gold is, you know, it's not measured by its round weight. Its odd weight is the same as if it's round weight. Gold is typically sold internationally, not by the ounces, but by kilograms, you know, by the gram. That's how they're priced. In many countries, you buy gold bars by the gram, 10 gram, 15 gram. I know in the United States, people don't use standardized units, but everywhere else, people think in grams and they don't think in ounces. They think of the sovereign as 7.23 grams. This one is 5.805. You know, this is 31.1 grams. Bars are more common in Europe to be 50-gram bars, at least for gold and silver. And yeah, so as it was dropping a little bit, I was buying in a little bit. Do I think we're kind of at the bottom? I think we're close to the bottom. I mean, it could go lower. Some of my midterm machine learning charts, they predict a lower price of gold still is possible. And if it does go lower next month, I'll be able to pick up more gold, which is pretty cool. And see, like I said, it's a sale. And also, I want to point out this. If you look here, right, at the pattern, at how like gold is priced relative to how it is priced everywhere else. At this point, we broke the $30 RSI, and we broke the exponential moving average, which means that this is pretty much a bottom. And right now, we are doing exactly the same thing. Of course, the situation is slightly different. Here we had lockdowns, right? Here, well, what is the external situation? Well, holidays are over and people are looking, and even though there's no restrictions, there's surging number, and there is a vaccine, there's surging numbers. The numbers are not slowing down for the pandemic. So, you know, people are getting more worried. They're like, wow, even if we have a vaccine, when is it going to end? And if you listen to, like, you know, the Federal Reserve and everything, yes, they haven't given out all the loans, but we are only at the beginning. They're saying, everybody's saying that, you know, like if you look at the CDC or any of the health experts, they think that it's going to continue for another 7 months. And it's not so much that this disease will kill you. It's just that this disease, if it is there, it breaks consumer confidence. Tourists don't want to come. Certain countries might put travel restrictions for you to go to their country. If you want to travel, let's say you want to go to, I don't know, Australia, you go there, they'll put a 14-day quarantine on you, and then they'll be like, yeah, you have to wait 14 days and then you can enter. And people today are shocked. They don't want to do it. That's because we've lived in an era where everything's so fast. You know, if you go to like, I don't know, 50 years ago and you wanted to travel in the United States, you had to go by boat. That took a month. It took like what, 3 weeks, 2 weeks, depending on the boat, a fast boat, slow boat, depending on the weather. It wasn't like 8 hours and you're from Europe to the United States. It wasn't that. It was really like time consuming. I mean, Titanic spent some boats sank along the way and people died. You know, it was not a sure thing. We've been too used in the last, I would say, 30 years for everything being certain and everything being plannable. And of course, when everything's plannable, you have huge consumer confidence and people will consume like crazy. If you have any event that throws a wrench into the whole system, which is very efficient but very fragile, then you don't have consumer confidence and people will buy less. It's not magic. It's not like, it's just like, you know what it is. If people are not so excited about the holidays, they won't buy more. And also, I said I think a lot of precious metals, not necessarily gold, but a lot of the precious metals, this sector is undervalued. And that's why I also bought platinum. You know, I bought an ounce of platinum a few months ago. I said, yeah, platinum's at rock bottom. You guys should like buy a little bit of it. There's no reason not to, and there's only like potential upsides. There's a lot of potential upsides for it, and there's not so much platinum. And guess what? Platinum is the metal that has been holding out the most during this period. I mean, it's been holding out well during this period, and it's been gaining. I kind of like wished it wasn't gaining so fast. I wanted to pick up more before. I might pick up 1 more ounce before the end of the year because it's still cheap. It's still cheap. Platinum is still quite cheap. And if you can pick up platinum, pick up platinum. People think that it's worth it as a monetary metal. No, platinum is a modern monetary metal. It is considered a supranational currency. It has a supranational currency status. It's not a tier 1 currency, but it is supranational. And just like silver, it's on the same position. But it is just so much cheaper compared to gold. And it's on a complete discount compared to gold. Gold is a tier 1 asset. And you know, I like to do what I preach, and I've been saying to people, you know, if you see gold going down, you need to reframe your thinking. I'm not thinking like, oh, it's tanking. You have to think that, oh, it's on sale. It's getting interesting. It's very interesting, and maybe like, you know, I can buy some of the gold that I wasn't able to buy before. I was thinking of maybe just going like waiting until it dropped to the most to 1800 and then picking up a full ounce of gold. But then I thought, maybe no, maybe not. I think I picked one up when it was like 1790. I bought 1 more sovereign, so I have 4 sovereigns coming. I have already picked up 2 of my sovereigns. So that makes almost an ounce of sovereigns during this period, this last phase of the downturn. And before I was picking up a small amounts of like, as I was buying silver, I was picking up Swiss gold too. I think these gold coins, they're pretty good because they have very low premiums on them. And it allows you to get into physical gold at a very low cost. And the thing with paying high premiums is that if the gold goes down, you know, when you resell, sometimes you get some of the premium back. But usually when it goes down too much, and you try to resell, a dealer will just simply offer you the price of gold because they know that you're not going to get a better deal because it's on a downward trend. That's the story, you know. There's some coins that I think, you know, when I'm buying fractional gold, I've been testing out the different types. I've been trying to buy different ones. What I've noticed is that some of the fractional gold have been more circulated than others. The Swiss 20 Swiss franc typically has not been circulated a lot. The semi-modern sort of French Marianne Coq is also in relatively good condition. But the older coin like the Napoleon 20 French franc, these are heavily circulated. Like this one, I don't know if you can see it if it'll focus, but it's relatively, yeah, I was out of focus for a while. It's relatively, you can see there's some stain marks, a handle. So it's been heavily circulated. And I can see it when I put it on the scale that the French franc weighs a little bit less. So it's worn down a little bit. So I don't like it as much. But the sovereigns, you know, the king sovereigns, these king sovereigns, in my research, I realized that actually this was a period when they started introducing the pound notes, and they started removing from circulation most of the sovereigns, and specifically the George sovereigns. They were typically they were minted for circulation. However, the banks and central banks preferred to not circulate them and instead give out banknotes, which goes back, you know, they're not stupid. This is the better money. And obviously, if you have a £1 note versus a £1 gold coin, which one would you choose to give your customer? You will give them the £1 note, not the £1 gold coin, because the £1 note is, you know, that inherent value of gold is not going to depreciate. While the note, they can print as many notes as they want, even though they're both £1. So it goes back to their theory. I forgot the economist that came up with it, but there is the principle of the bad money chasing out the good money. So the good money, that is the gold coins, were put out of circulation, even though officially they were still supposed to be circulated. I don't think the bank would like refuse to give you gold sovereigns if you ask specifically for gold sovereigns, but they might put some barriers, you know, that might not be the default thing they give you when you ask for your pounds and so on. So yeah, I mean, these coins are circulated, but not as much circulated. So that's why I like my George sovereigns. The George sovereigns, relatively good condition overall, all of these coins, and they still have the full weightage. That means most of them weigh slightly over the official amount by a few, I think 0.1 gram, 0.1 gram. And most of these coins were used, these are bullion grade, so I don't really mind handling them. But most of these coins are, they were used in trade. They were used in trade with Australia, in the Commonwealth, in the Americas, and they were accepted as a currency. And also in Brazil, I believe, they were used for a long time as accepted as money for trade. So the sovereign for a long time was considered, especially the gold sovereign, was the premier world reserve currency. And before that, you had the silver peso, which was used it was the Spanish peso basically, because Mexico was a Spanish colony back then, but it was the Spanish Mexican peso, which was used as the world reserve currency. And you could trade with that coin across the globe. You could trade with it, use it as a payment in Latin America, in North America, in the United Kingdom, all across the Commonwealth, India, China, Russia. They would all accept the Spanish silver peso back then. Then, of course, afterwards, the fall of the Spanish Empire, they lost a lot of international influence. The gold sovereign became the international currency, and gold. Then we moved on to a gold standard, and you know the whole story. And then we moved off the gold standard, and we're on today's current debt system. I feel like, you know, right now the current drop, it's sort of, when they first announced QE, people expected massive QE, like out of completely. I mean, it was a right expectation that we would have QE, but people were expecting for gold to be valued at $2,000. They would need to do a lot more QE than what they did before. It was a lot of QE, but they would need to do way more QE. Probably if they did all the rounds of QE, it would be justly valued around $2,000. And I think eventually they'll do all those stimulus packages. However, currently, I think at the end of the year, I don't see stimulus coming. Stimulus requires government to work together. But in the meantime, you know, because of a lack of stimulus, gold has been going down, and the stock market has been roaring. Like, it's a little bit crazy considering that most of these companies, especially those indexes, not so much individual companies, but the indexes are priced so high and people are piling into these indexes. And one of the things about these indexes is that there might be 2 or 3 Teslas, Amazons, and so on that are doing well during this pandemic. Well, even Tesla. I mean, Tesla sells cars. Who's buying a car at this moment? That's the thing. People don't realize that Tesla, most of their business is, yeah, they don't have very much business in the United States. They have more business in China and other places. Maybe it might work out for Tesla because they are actually implanted in a foreign market rather than in the US market. But for all other electric companies and car companies in the US market, there's no expansion there at this moment because people are putting off big purchases due to fear and lack of consumer confidence. And I'm not saying consumer confidence is something vague, that an economist would say. I'm saying that people are scared and they don't have money and they're not going to buy as much. That's what it is in real terms. Have I been doing well with my stacking? Yeah, I mean, I'm adding almost 1 full ounce of gold. I'm going to keep adding more to my stack, to my physical stack. And I'll keep working on the machine learning program so I can give better forecasts to what I think will be the price of gold. It's not so much that the machine knows the future, but it's able to look at every single market and make a best guess prediction. It doesn't mean that it knows tomorrow how the price of gold will move or what will be the bond price tomorrow. It knows based on today what is the most likely outcome tomorrow and the day after and so on. But it's not right all the time, and there are times when it's quite wrong. Which you can clearly see on this graph. It got quite a few things wrong. Like around this area, it was thinking, it'll be priced slightly higher, and then it believed that it should be priced slightly lower as it was going up. It's kind of it's not perfect. It's nowhere near perfect. There's a lot of areas where it's not even close to the projected price, despite having similar patterns. This is 110 days. So it was able to reproduce some of the patterns, as you can see here in the pricing. And it did reproduce, like for example, I believe that even when it was down here, it will move up twice. It did repeat that later on. It believed that it would, during this dip, that there will be a slight rise sometime in this area. It's not a perfect model. I think what might happen is here we might see slightly more downward trend. It might go and stay around the 1700 level. Like I said, it's going to continue sideways until the end of the year, and 2021 we might see some potential upward movement. But and in my past projections, I said, look, most likely we'll see higher prices, 2000 plus prices, March, maybe February earliest, maybe March. Further down the road after March, we might see some more upside movement. But before that, I think we're going to be sideways downwards. And but it's a good time to actually pick up some gold if you can, because it's on sale. So yeah. Anyways, will I be buying more silver? I was thinking of buying more silver, but honestly, even with the drop in price, nothing's on sale. So the only gold has been on sale, and old gold. I was thinking of maybe picking up some fractional silver, but even fractional silver is taxed here, so it's not a great deal. Either way, that's it for today. My dog wants to give me a lick, and he wants some food. He's stuck his nose on the mic. And yeah. Keep stacking good health. I'll post more information every day. At least try if it's not too late. Otherwise, you just give me a video of me working on the machine learning program, and I'll show you new stuff as long as I pick them up. Thank you for watching. Subscribe for content. I try to post daily content, and thank you. Click the like button. Helps me out a lot. Thank you for watching. You guys are great. Keep stacking good health. Dave out.